turning to policy, I just want to describe a bit what the world looks like in 2024 and looking to the medium term. The world is a very different place today than it was in 2006, the base year for many of our analyses in this report. Back then, and for the prior 20 to 30 years, trade expanded faster than global GDP, and globalization shaped policy, markets, and institutions. Trade still is a large share of global GDP, but since the global financial crisis, it's no longer an engine of growth. The world is more fragmented. Geopolitical tension and conflict are coloring virtually every aspect of international trade and investment. A partial decoupling of the economies of China and the United States is happening in real time. The Trump tariffs of 2018 that were upheld under Biden have begun to shift U.S. and Chinese trade toward other partners, and this was accentuated after the invasion of Ukraine. No doubt, the new U.S. tariffs on EVs, batteries, and goods in other strategic sectors, and possible retaliation by China will continue to weigh on the bilateral relationship. Further disruptions to global trade flows will come from the decision earlier this week by the EU to also apply large new tariffs on Chinese EVs. Similarly, if we break the global economy into two blocks, along the lines of votes in the UN on the war in Ukraine, we see the gravitational pull of geopolitical factors on global trade. This is affecting the market for our exports and the risks embedded in our supply chains. For the world, it's no doubt a net negative. However, firms and economies that are nimble and responsive may capitalize on some opportunities from the realignment of supply chains. For example, there are opportunities for us in the North American EV supply chain from critical minerals to assembled vehicles. This said, protectionism and industrial policy can also impede trade among friends. There's uncertainty for Canada under a new U.S. administration of any stripe. Both Republican and Democrat camps are protectionist, and since the CUSMA is up for review by 2026, we can expect a rough ride. This will be a tough test for our economic diplomacy. In the late 1990s and early 2000s, Canada pulled itself out of fiscal deficits and into surpluses, in part by riding on the coattails of a roaring U.S. economy. There's not today the same positive external factors to mount our current challenges. Global growth over the medium term will be about 3%. Demographic change is constraining the supply of workers. Globalization is no longer delivering a rising supply of cheap intermediate or final goods, and so costs will tend to be higher. With other factors affecting the balance of saving and investment globally, this means that the neutral rate of interest will be higher. David already mentioned this.